Let's get straight into it. 34,000 point, that's the high that was hit last week, and we saw much excitement around it, but a lot of questions now being asked about the sustainability of it, because many are saying that in the short term they are sustainable, in the medium term things are looking increasingly bullish, but longer term, that's when this entire scenario gets brought into doubt.
Alishia, I think that one of the trends around the globe is that interest rates are at sustainable lows. The Americans keep pushing out the sort of the window of where they think they can keep rates down, in so doing stimulate economic risk-taking, probably dissuade people from investing in cash and putting their money into more growth-oriented and job-creating ventures. That's also true for Southern Africa. Although we have slightly positive real interest rates, it's very nominal at the moment, and shares offer a couple of things. Firstly, they offer diversification. So you're going from taking a bet on a particular bank that might or might not be overextended, might be under pressure from the regulator, to deleverage or to lessen exposures, into something that is, one, growth oriented. So instead of getting just your money back, you're going to get hopefully a capital return over time, and secondly, an increasing and an ever increasing dividend. So I think that the bias is that if you look at the JSE, it's not a completely broad-ranging increase in across all sectors and shares. It's quite focused around leading shares, probably typified by international investors who are big investors in the South African exchange.
Absolutely, you've got to be very selective in this market. I mean, just this morning, and we've been speaking about it for the longest while now, retailers and their valuations, and how you just cannot justify on the basis that retailers have growth the kind of valuations that they're currently trading at. That if you look at the underlying value, it's very difficult to justify at this stage of the game if you're comparing it to the likes of the banks, seeing more fair value, and then some of your diversified players within the resources space.
I'd certainly say South African banks. I'd qualify that one to say our South African banks.
Absolutely. Well, let's take a look at the rand, because it's come back to below that 8 rand mark to the US dollar. Is it sustainable, and where do the markets offer value on that basis?
Yeah, I think that advisors, economists, bankers, and the people that sort of others that the general public listen to around these things need to take a good hard look at themselves, at their forecasts a year ago, and so forth. I have been a bit of a rand bear, and it seems like when it shot through 8 rand, headed for 8.50, and maybe the naysayers would say 10, 12, 15. It stopped, and it's reversed its trend, and it seems to be bouncing around that sort of 7.50 to 8.50 as a nice broad range. Why would it weaken? Well, it's about trading partners, it's about capital flows. It's a commodity. It's something that people buy and sell, and if there's more buying, it's gonna get stronger, and if there's more selling, it's gonna get weaker.
Some of the appeal, though, that that the rand or the South African economy puts in the spotlight is the fact that relative to global interest rates, for example, we've got interest rates sitting pretty high, and I say relative to some of those developed markets, importantly, and that stimulating some carry trade appeal, obviously, which would bolster the rand moving forward.
That's quite right. The trick there, though, is that if you look at a euro or a US interest rate at a couple of percent or less, compared to us offering interest rates in the capital and money markets of, say, 6 or 7%, that's for a full year. So if you're earning 1% somewhere else and 7% here, you get 6% better, but you've got to wait 12 months for that. If currency markets catch fright, and if you have a trend against the rand for whatever reason, actually driven out of South African economics or politics, or driven by a sort of a move against a divestment out of Turkey and some of the other emerging markets, is you immediately could take a hit of 10%. So you're waiting for a full year to get the 6% positive carry, but you could take a hit of 10 or even much worse than that. We've seen the rand show great levels of volatility. So I suspect it's quite a skittish trader sitting on the other end of that button. So yes, there is a carry.
So in that context then, Mike, how are you advising clients right now to structure their portfolios?
I think the savvy advisor is a person that doesn't deny the logic of diversification. So it's not about saying, well, we'll just diversify ourselves out of a position of taking any risk, but to diversify across domestic, international markets, lousy guaranteed returns overseas, much more probably the overseas equity markets and growth markets look like they haven't had the run we've enjoyed, as epitomized by these amazing index levels that we've achieved. So it is about diversifying. It's not about backing one horse, because you have a higher concentration risk, and that means that if the reward's there, it'll be great, but if the disappointment is there, it's going to be tough. And the trick, if you're not right, is how not right are you, and are you on a slide? Do you hold and let it correct itself? That's the big trick for individual investors, because I think we as individuals find it very lonely. Whilst there's lots of media out there and you read a logical story, when it actually happens to you that something doesn't go the way you hoped, you could be overreacting, and in that lies, because you're banking losses, or you know.
Absolutely. Well, let's take a look before we let you go, because we've run out of time here. But the tax year end is fast approaching. Considerations that need to start getting made is retirement annuities. I mean, that ranks amongst the list. What do investors need to start thinking about when it comes to their retirement annuities?
Alishia, the minute my salary hits your sort of high levels, I would then...
I wish, Mike. I wish.
I'd immediately deploy funds into retirement savings. And the reason for that is that the government give you... Because they don't want for you to be a ward of the state when you retire. They want you to save for your own retirement and not be a liability and responsibility. So they give amazing tax breaks to retirement savings. Something that is very, very important for people, individuals like us, to have a good look at. The retirement annuity regulations are changing, and they are moderating the amount that you're allowed to. You can't just put an unlimited amount into retirement annuities and claim that as a tax deduction. But certainly I would advocate engaging with tax advisors or investment advisors to look at what can be done, because there's a significant benefit both in placing the funds into retirement investments, whether an RA or your company provident fund or pension fund. There's a benefit in the product in as much as there's no tax or capital gains tax levied against those portfolios, and there's an estate duty benefit at the end of it all, where retirement assets are neutral. There's no estate duty tax.
So some thinking needing to be done ahead of that tax year coming to a close. Mike, I don't know if you heard, but even Sam chuckled on the side of me here. So we're going to have to leave it there. Thanks so much for your time.